period at the end of 2017 is often referred to as crypto's Wild West era. Token sales took place in abundance, almost completely unchecked and unregulated. For retail investors, fortunes were made and destroyed. For the sparse venture capital firms and institutional investors that were in the crypto space at the same time, the story was more or less the same. Faced with a completely new technology, VCs were forced to make quick decisions with limited information. Nearly 3 years later, however, things have changed. As the cryptocurrency industry has continued to mature, so too has the investment side of the industry. Recently, finance magnate spoke with Multicoin Capital co-founder and managing partner Kyle Samani about his company's approach to developing investment strategies in the cryptocurrency space. I'm Rachel McIntosh, and this is the Finance Magnates Blockchain Podcast.
Kyle, I want to say thanks once again for taking the time to be on the show. Really happy to have you.
Hey, Rachel, thanks so much for having me on. Good to be back.
Absolutely. So I know who you are, but can you tell us a little bit about yourself and the work that you do and how you got into this crypto space in the first place?
Sure, there's a lot of questions all in one, so let me answer.
Sure.
I've been around computers my whole life. My dad's a software engineer, so I've kind of always grown up around computers and programming. Studied finance at NYU, thought I was going down that career track. Realized while I was in college, my passion was really in tech startups. And so after college, did my first tech startup. It was called Pristine. Pristine built software for Google Glass for surgeons. I know Glass was never a very popular consumer product, but it was actually a pretty interesting tool for surgeons because surgeons are sterile. They work with their hands. They're gloved up. So it's kind of workflow automation stuff for surgeons. And as part of that, did that for like a couple of years, and then Google killed Google Glass, which was a problem, as you might imagine.
Yeah.
So after Google killed Glass, I pivoted the company, and the company ultimately was acquired in kind of a talent and IP acquisition. And so come 2016, I didn't know what to do. I had to find kind of a new calling in life. And I discovered this thing called Ethereum in March of 2016. I had heard of Bitcoin previously, but I got enough a strong background in like monetary policy or macroeconomics. And so Bitcoin was never really appealing to me for, I think, the reasons a lot of the early Bitcoiners were drawn into it. And so Ethereum, though, really interested me because a couple of reasons. One, I felt the pain of platform risk. Google had literally pulled the rug out from under me.
Right.
And so I understood what it meant to depend on a platform provider. And when I understood how Ethereum was an open platform, that you can't just have one party rip the rug out from under you, that was immediately very appealing to me for kind of obvious reasons. The second was that I realized once I looked at smart contracts, what I realized is I was like, wait a second, every financial institution really in the world is a smart contract with people on top of it. And when that kind of light bulb clicked for me, I was like, oh, this is a very important kind of concept and breakthrough. And so that kind of drew me into Ethereum in early 16. And over the course of 2016, I just started developing, a hobby, like Ethereum was a hobby. And then I said, okay, well, I need to understand Bitcoin. So I went down that rabbit hole. Then I was like, okay, well, I probably need to learn more about the history of like fiat currencies and macroeconomics and monetary policy. And so I spent a long time going down that rabbit hole. And then like by the second half of 16, Zcash popped up, Monero started to become a thing. There were like that early era, like it was pretty clear that like the rate of things happening was accelerating. And so I started to get really excited. And by spring of 2017, I realized that I was spending 40, 50, 60 hours a week at home just reading about crypto. And I was like, I should probably be professionally by now. And so I made the decision in May of 2017 to launch Multicoin with my co-founder, Tushar. Tushar is one of my best friends. We met at NYU 12 years ago. And so we launched Multicoin and launched our hedge fund on October 1st of 2017. And we added our first venture fund in July of 2018.
Okay. Wow. So now you're at Multicoin, and you guys have been doing super well for the last few years. So can you tell us a bit about Multicoin? You've got this crypto mega theses, and Multicoin Capital has a thesis driven approach. So can you talk a little bit about that?
Yeah. So, as I got into crypto, I've been in crypto now kind of actively-ish for 4 years. And in that time, I've realized that like crypto is touching the implications of a lot of different things. Like the obvious one is like Bitcoin and monetary policy and whatever. But like the more I've learned about smart contracts and the applicability of those, the more I've learned about Web3 and those kind of opportunities, the more I've realized that there's crypto just has broad this technology is going to have many kind of broad things that it touches, some of which I cannot forecast today. And so over those few years, I started to think about how do we kind of compartmentalize our thinking on like these really broad areas into something really succinct. And so about a year ago, I published our first really encapsulated version of that in a very succinct way. We call that our crypto mega theses, and published that I think in April of 2019. And so in that post, I kind of outlined three mega theses. We call them mega because we think each of these opportunities will create at least $10 trillion in value over the course of the thesis playing out, which is a decade or two.
Okay.
And so those three theses are first one is open finance. This is really kind of about enabling and broadening access and exposure, financial access, and then about allowing parties to engage in financial contracts without having to have a third party in the middle.
Right.
The kind of the purest representation of this today is basically the DeFi movement that's happening. We're very much having parties engage in a bilateral or multilateral smart contract and do some sort of transaction. This is clearly kind of a powerful concept. We think it can have all kinds of interesting implications over the next decade. Second major thesis we invest in is what we call Web3, and this is really about building the a open and neutral technology stack for entrepreneurs to build applications on. So like I have felt the pain of Google and Glass before getting into crypto, but like entrepreneurs have experienced that same pain with basically all the major web distribution channels, Google, Amazon, Apple, Facebook, whatever, you name it.
Right.
And so there's now this emerging theme of companies building infrastructure where consumers can own their data, manage their data, access the data, and developers can go direct to consumer without relying on these third parties. And that kind of movement is broadly called Web3. And then the third major thesis we invest in is basically around the opportunity for non-sovereign money or state-free money. And so Bitcoin is kind of the easiest way to think about that. Just think about Bitcoin as digital gold. We actually think that the market opportunity we think digital gold is understating the market opportunity for that. The problem with digital gold is that it implies that it's a rock and you just put it under your mattress and just kind of sits there. And I think if you get one of these things to be usable and useful globally, you'll end up creating the opportunity for not digital gold, but for digital cash. And I think that market opportunity is meaningfully larger than putting a rock under the mattress. And so those are kind of the three major theses that we invest along, and that's what keeps us busy all day, every day.
So what does that, translate into on a practical level? What kinds of projects and maybe perhaps what specific projects are you invested in at the moment?
Yeah, so we have our full portfolios on our website, multicoin.capital/portfolio. Or at least everything that we publicly disclosed is there. I think there's like 20 or 25 investments listed there. But happy to kind of touch on, just an example out of each of those three buckets.
Yeah, sure.
So in open finance, we kind of think about, there's two major subsectors in open finance. The first is the kind of DeFi, as I just alluded to, and like Maker, Compound, synthetics, all those things kind of very clearly fit in that bucket. The second major area of open finance that I think is probably more interesting, actually, at least in the near term, is the other side of open finance, which I think is kind of the exchange tokens, and just the exchange generally. The exchanges sit at this interesting place where they bridge old finance and DeFi. And they're starting to do more and more DeFi things with various forms of peer-to-peer trading and their own chains and smart contracts. And they're slowly inching their way from centralized to decentralized. And we think that bridge is really interesting because very few users go from managing their wealth in fiat to managing all their wealth in DeFi native activity as kind of a simple, single, one-time transition. That transition is a transition. It takes people time. And so the companies that are positioned at kind of intersection, we think, are the most interesting. And so we've been really public about our thesis in Binance and BNB. We think Binance is probably the most interesting of the exchange tokens because they're just focused on a global reach and global scale operations. And their mission very clearly is to help billions of people go from the past to the future. And they're really working actively to make that happen. And so I think those are super interesting. And yeah, because they have one foot in the centralized camp and one foot in the decentralized camp, they can do things in very creative ways that are otherwise impossible. So for example, like Binance just bought CoinMarketCap, and that's obviously a very centralized thing, but you can totally you fast forward 2 or 3 years from now, it's very plausible that CoinMarketCap will become one of the biggest on-ramps for people to get their own private keys and start buying crypto and managing crypto. And that will all happen natively through CoinMarketCap. Like, I'm almost certain that will happen. The timing is harder to say whether that's 12 months or 36 months or whatever, but like, that's almost guaranteed to happen over the next few years, right? So that intersection we think is just super interesting. So that's like an example of something where we made a pretty big investment in kind of the open finance thesis. In the Web3 area, we've made a lot of bets. The one that's probably most interesting at the moment, that timely, is probably Arweave. So Arweave is a protocol that enables permanent file storage. So like today, if you go to Amazon or Google or whatever and say like, hey, I want to store this file, they're going to be like, great, it's 10 cents a month, or whatever the price is. And you're going to say, no, I want to store it forever. And they're going to say, you can pay 10 cents a month. And they're like, how many copies is it? It's like, well, you can replicate it in 7 data centers. And it's like, well, what if I want more copies to make sure it's there forever? And they're going to say, what are you talking about? So permanent storage is kind of a new concept that's never really existed before. If you think about the problem of like, how do you guarantee something will be around forever digitally? Right. The answer basically is you just need to have as many copies as possible with as much heterogeneity as you can. So like different operating systems, different hardware, different CPUs, different countries, different regions. Like, you just want as many copies as possible and spread out in as many configurations as possible. That way, if anything systemically goes wrong in any of them, like, there's still more copies around. And so Arweave is a protocol that incentivizes anyone anywhere in the world to permissionlessly store data and be stored forever and get paid for it. And so the chain's been running now for about 2 years. We invested about a year ago. And it's just been like, if you just look at the Arweave growth chart, it's just like a beautiful up and to the right kind of growth curve. And it's just, you look at like censorship on the internet, you look at decentralized applications, you look at NFTs, you look at people archiving history. There's all these weird things that like don't individually seem that big, but if you add them all up, it's actually a pretty meaningful amount of data. And so Arweave has just been growing super fast over the last 12 months. And we're just very excited about where that's going. They just rolled out version 2 a couple months ago, and like growth is just really accelerated.
Okay, that's super exciting. And also I love this idea of permanent storage as something that can happen on a blockchain.
Yeah, one of the other cool things about it is that like not only do you get guarantees that the file will be there forever, you also get a guarantee that the URL will never change. In this case, the URL is half of the file. It's all content-based addressing, similar to IPFS. And so that's the other good thing, is not only do you have a guarantee the file will live somewhere, you have a guarantee that the URL will always, a single URL will always retrieve the file, because the URL is mathematically tied to the file itself.
Okay, yeah, that's some real, like, this idea that you said earlier about bringing these companies from the past into the future. Like, that sounds like some really next level, like, kind of sci-fi kind of stuff. But yeah, I want to talk to you a little bit more about this, the concept of DeFi as you were describing it. So you mentioned briefly, like, that you're sort of thinking about DeFi, the picture of DeFi over the next 10 years, and how, these different use cases will evolve over the next decade. Can you talk a little bit more about your thoughts about, what that might look like on a practical level? Right now, we have all of these DeFi platforms that are, sort of functional, but obviously, we're working out the kinks. What do you think is next with that?
Yeah, so the biggest, so right now DeFi is intellectually super interesting, just like seeing people recreate traditional financial contracts that are traditionally bilateral in these multilateral open ways. And that's super cool. There's just tons of innovation happening there right now.
Yeah.
The big problem with DeFi is that today the usage of it is extremely circular, and that basically there's like on the order of like probably between 100 and 1,000 people who are ETH whales, who are like probably something like 90 to 95% of all DeFi.
Yeah.
Like, and that's like pretty well documented at this point across all the major DeFi protocols. And so you have a very small number of people who are already ETH wealthy, who obviously follow all this stuff, who are using these things, and they're using them for more or less one reason. And that reason is to just lever up and go margin long, ETH and other things. And so it's intellectually very cool. It's financially very cool. But the actual like organic net demand, like net new value creation to people who are not already ETH rich, like that's more or less non-existent.
Right.
And so the question is like, how do you get this to people that like creates new value that was not previously possible? And it feels like we still have a ways to go to get there. So when and how we cross that chasm is very unclear. One of the where I probably differ from most of my peers, and where we've been trying to think really hard about how do you cross that chasm, and then like make those bets. And today, I would say if you had to like pick one company or one class of company that's best positioned to bridge just like circular DeFi whales to mainstream, the exchanges are almost certainly the best positioned to help make kind of transition that. That doesn't mean they will ultimately pull it off. They may not. But if you had to pick one set of companies today, you know, the exchanges are most certainly the best positioned. And so that's part of the reason why we've been so focused on the exchanges is figuring out their all relative strengths and weaknesses, and then like figuring out how they're going to, you know, how they're going to make the transitions, right? So that's been kind of driving most of our thinking on DeFi is like that kind of process.
Okay, so you wrote this piece recently about DeFi platforms, and you mentioned this concept of invisible asymptotes. So is that what you're referring to? Like, you know, these sort of the circular ETH economy that exists in all these DeFi platforms that's basically, you know, keep preventing the ETH economy from growing beyond that point.
Yes, directionally. So that post was actually specifically just wasn't even focused on like how do we expand ETH to, or how do you expand the users of DeFi to people who are not in the system today at all. That was really just focused on, look, we know people want to lever up. Like, how do we make it as easy and effective as possible for people to lever up using these things? And just kind of looking at like the technical limitations in these systems and like the different ways of doing it, which is it's necessary. Like if you're ultimately going to serve this to mainstream audiences, first you need to have the technical foundation, which is not quite there, although it's pretty close. And then you need to have the go-to-market strategy and the user value prop and all that stuff, which is a separate question actually.
Right.
But they're both certainly related before DeFi can become mainstream.
Okay, I see. So basically, there's the short version is that there's a lot of different things that would need to happen before we see DeFi platforms sort of gathering mainstream users or even users that are outside of this sort of elite ETH community.
Yeah, definitely correct.
Okay, right. So kind of along the same lines, I want to ask you a little bit about the relationship between private and public markets in cryptocurrency, and how these two relate. And you know, what advantage do we have seeing both sides of this coin?
Yeah. So if you think about traditional asset class, let's take equities. In equities, liquidity is a proxy for maturity, right? Like Series A companies don't go public, right? Like it traditionally was like you were doing, you know, probably 50 million in revenue before you go public, and these days it's more like 250 million or 500 million before you go public. And in crypto, these things, in order for the products to work, the tokens have to be liquid. And so you basically see these companies, so to speak, going liquid at the Series A in kind of analogous terms. And that's a very different just dynamic than you see in traditional equity markets. So because of that, like fundamental structural difference, if you're going to be a private market investor in crypto, that means you're more or less limited only to like, at least as far as tokens go, you're limited to seeds and ABAs. And so that's problematic for all kinds of reasons in terms of like fund structure, fund returns, and a bunch of other things.
Right.
And so we realized that pretty early on, and we said, look, like in this market, things go liquid much sooner. So we need to be able to play both sides of the market, both the liquid side and the illiquid side. And because those things are so closely intertwined, because things go liquid so early in their life cycle, that makes a big difference actually in how to think about running your funds. And so we've been pretty adamant, and that's why we did this early on, where we launched our hedge fund in 17, and we added a venture fund in 18. So we now have dedicated vehicles, one which can play private, one which can play public, all in one market. And then we leverage all of our learnings and insights back and forth. So we have one investment team. It's not we have separate investment teams. It's one investment team internally, and we like leverage all of our insight and learning across those. So just one example would be like we've been obviously talked about BNB already. We've we spent a tremendous amount of time understanding the intricacies of all of the major exchanges. And there's new people launching new exchanges all the time, both centralized and decentralized exchanges. And so all that work we've done that's, led us to underwrite BNB, let's say, on the public side, also makes it possible for us to underwrite new private exchange opportunities. But that's only possible because we've spent so much time on the public stuff.
Okay.
And we see similar dynamics happen in reverse between private and public as well.
You've seen dynamics reverse between public and private. Can you talk a little bit more about that? What does that look like?
Well, I just meant so in that example, we spent all this time on public exchange tokens.
Okay.
And when new exchanges come out, private ones, we're very well equipped to underwrite those and assess them. But the same thing also happens in reverse, where there's opportunities that are in the public markets, and we feel much better qualified to underwrite them because we spent so much time looking at all these other things in the private markets. So that dynamic works in both directions.
I see what you mean. So I'm curious, sort of how you see Multicoin and other venture capital companies in the cryptocurrency space, how your role is going to evolve moving forward as, the dynamics have shifted, between public and private markets in crypto and will, presumably continue to shift through the future. What kind of influence do you think that Multicoin and other VCs in the crypto space will have going forward?
I think the biggest thing that's changing is that a lot of the stuff that was invested in over the last 2 years is going liquid now.
Yeah.
So maybe Compound just went liquid, but Solana just went liquid, a whole bunch of Helium, Graph, Arweave, LivePeer, all these DeFi things, synthetics, a lot of these things that were illiquid or not liquid, 2 years ago, let's say, all becoming liquid now. And that is, so the stuff that probably was private is becoming liquid and public. And so that's really changing how investors need to think about entries, exits, how they think about governance and engaging in these networks, thinking about, do you accumulate more in public markets or not? And so if anything, I think it's going to force investors to try and get better, so to speak, at being public market investors as opposed to private market investors.
Okay.
In private markets, you basically only make the decision to enter the position in private markets, and you actually generally don't choose when you want to exit. When you invest in a venture-backed private company, you're stuck until it IPOs or until someone buys it, and you don't really get to control either of those things happening.
Right.
In crypto, you have to think about exits, and so because it goes liquid pretty early, and so it just creates a lot of new dynamics in portfolio construction, governance, and those things. And so we spent a lot of time internally kind of creating frameworks on how we think about managing our liquid books. Because you get other weird dynamics, right? So if you invest in something, let's say it's doing really well, it's up 20x or 30x. Let's say you invested it was 3% of your portfolio. Now it's 60% of your portfolio. That's a good problem to have, but also you want that thing to be 60% of your portfolio. Right. And that creates weird and new problems as well in terms of managing your book. And so I think we certainly have gone through a lot of this learning over the last 24 months, and a lot of our peers are going through similar things today.
Right, because this is just a totally new. It's a good problem to have, as you said, but it's just I suppose this probably hasn't been anything like this in the VC space before, not exactly like this anyway.
Yeah, definitely not. Because remember, if it's liquid, then you're kind of implicitly saying, if I were to reconstruct my portfolio today, I would buy all of these things in these current proportions. And look, at 20 or 30%, maybe you do, but something is 60% of your fund. Is that really? Would you really rebuy 60% of your fund in that one? It starts to get very hard to justify.
Yeah, definitely. So another challenge that's that VCs and sort of everybody in the cryptocurrency industry has to deal with is the fact that this is a global industry. This is so new, and as such, new projects are popping up all over the place. News is running 24 hours a day, all the time, and as a result of that, there's kind of an information gap in between Western and Eastern media. On Twitter, on all kinds of different platforms. So what are your thoughts on that? How is that something that you deal with as a VC?
Yeah, so one thing that became really apparent to us over the course of 2018 was just how fragmented the kind of cult information divide is between East and West. We were somewhat ignorant of it, I think, prior to that. I mean, we were aware, but I think we were not to realize how acute the problem was.
Yeah.
And so going into 2019, we made the decision that we really wanted to actively invest in bridging that gap. And so we ended up hiring Mabel to join our team in 2019, as well as we translated our entire website into Chinese and Korean. And all of our blog posts now, and everything goes out translated and all that stuff. And the reason we did that was we wanted to build more direct lines of communication with the Asian community, both in China, Korea, and Japan, and Southeast Asia, like Singapore. And so we spent a lot of energy building those bridges. And it's really paid dividends. We just have, the more time you spend in Asia, the more time you realize that just like how the press operates there is very different. There's things that there are somewhat common knowledge that just don't get reported on in the English press at all. Why that happens, I still can't actually explain it to you, why that happens or doesn't happen, but it is a reality that it does happen. And so, like the Plus token scam last summer is a great example of like a super high profile that like Western media did not pick up on, despite the fact that like it was relatively common knowledge in China.
It's so bizarre. And
so you just see these things happening, and so we made a pretty strategic priority to do that. And so today, we bridge East and West through kind of a number of very explicit mechanisms. We have Mabel on our team. She's on the ground. She's a principal based in Beijing, and she's very plugged in with the Chinese crypto community. We have kind of partnered with a number of other firms in Asia in various kind of informal ways, just for sharing notes and sharing information and stuff. We have built relationships actively with all the major press and kind of key opinion leaders in Asia that we can. And really just work to cultivate that kind of back and forth dialogue, as well as the exchanges as well, because the exchanges, basically all the big exchanges are in Asia. And so, we've been doing that now, and we expend a lot of firms' resources in that, because we think it's a strategic priority. And if we can do it correctly, we think that can help us really bridge East and West better than any other firm.
Absolutely. Kyle, I want to thank you so much for your time. It's been such an honor and pleasure to talk to you. You've got so many interesting things to say. But before we go, do you have any announcements that you'd like to share? Can you tell our listeners where they can find you and Multicoin?
Yeah, so I don't have any announcements I can share at the moment. I can say I'm very excited about a few deals we're working on that will become public in the not too distant future. Okay, great. So very excited about those. In terms of finding me on the internet, I'm pretty easy to find. I'm on Twitter. I'm on Twitter. My Twitter name is Kyle Samani. That's just my name. You can email me, kyle@multicoin.capital, or you go to our website, multicoin.capital. All of our blog posts and stuff are there. And I encourage you to subscribe. If you go to the website, there's like a subscribe email button, thing right at the top. And so you'll get all of our new stuff right in your inbox.
Okay, fantastic. Thank you so much.